Rebroadcast the Voice of Forex is strictly prohibited without written authorization from Global FX Remote Group. All trading recommendations are meant for informational use only and are not intended to be used as advice for buying or selling in any financial and/or instrument. Any opinions, news, research, analysis, prices, and/or information contained on this broadcast is provided as general market commentary and does not constitute investment advice. Voice of Forex does not accept any loss and/or damage that may arise directly or indirectly from the content of this broadcast. You should be aware of all risks associated with foreign exchange trading and any financial market, and seek advice from an independent financial advisor if you are looking for trading advice and trading ideas. Forex weekly wrap-up show and week ahead. Wow, what a week. Boy, did we have some week. The euro-dollar continued like we said it would, pushing a lot lower. We had German CPI starting off the week much weaker than expected. That was very... I think the euro continued to show weakness because, again, inflation is abating. The numbers are coming down. Eurozone, again, weaker numbers across the board this week. I think that continues into this next week. The dollar continued to push higher. But we start off the week with weak European numbers with that German CPI number. Then on Tuesday, all of a sudden the Bank of Japan, Shirakawa, trying to flex his muscles, say, I'm different. I'm not going to do what everyone else says, and he goes to a neutral bias. Is that going to continue? Did he mean that? In my opinion, absolutely not. There's no way that the Japanese are in a situation of lowering rates. It's just not happening. Inflation is the highest it's been in years. Finally, they have inflation. Now, all of a sudden, they're more worried about growth than inflation. They're the Bank of Japan. They're not the FOMC. Give me a break. Corporate balance sheets in Japan are the best they've been in decades. I say again, in decades. So Japan can weather a downturn easy. So we had Shirakawa flexing his muscle, basically saying, hey, I could go either way. And I think that, yes, we did have a yen sell-off on that, but sure enough, we drifted back down. Euro-yen rally, but then sold back down again. And turning on Wednesday, then we had Ben burn your ass. Obviously, that was a pretty big event. What did he do? He burned your ass is what he did. He basically said, I cut rates, and I'm not giving you what you want. Because I see there's something worse out there that you don't see. And this is like, to me, this was a little bit, and I know the market didn't react like that, like I'm going to say now, but Greenspan's irrational exuberance back in '96. It just felt like that. It felt like he's saying, guys, you're getting ahead of yourselves. I understand things are great and things look good, corporate profits are good because of exports, all this stuff, yada, 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 but we are in the fourth inning. This is far from over. And I think that really, that's why we did have a little bit of dollar sell-off after the event. If you're a premium listener, you did very well on that indeed. Because again, the statement, everyone was looking for that big, I'm cut and done. I'm not doing anything. He didn't say that. He said, I'm here to cut if needed, and I'm also here on the other side. I'm worried about inflation getting out of hand. So he did deliver that inflation side of the story, but he did not cut his growth side of the story. And I think, yes, again, the numbers out of the U.S. this week were great. Very strong data out of the U.S. Certainly all the numbers, barring construction spending on Friday, were very good. GDP, non-farm payroll, everything was good. And regarding non-farm payroll of the U.S., wait a second. The numbers, we didn't get more manufacturing data. We didn't get more manufacturing jobs, which we should have. Okay, but we had mortgage brokers, realtors, and Wall Streeters getting jobs. Give me a freaking break. That's got to be do something with J.P. Morgan, maybe hiring Bear Stearns people. I don't know, but I got to tell you, there's no one on Wall Street really hiring right now. So that's a joke in my opinion. So I think next month's numbers are going to be abysmal. Abysmal. And we'll see. The employment claims continue to run higher, getting over 4 million on the continuing claims. This is not good. And it's funny, the jobless rate fell down to 5%. I take note with that also. Number one, how many baby boomers are going into retirement? They're off the employment rolls. And how many people just can't find a job? And they're just not looking anymore, and they come off as well. So that 5% is such a joke. We're going up to 7% unemployment. It's just the government projecting the numbers. Just a joke, in my opinion. So the U.S. numbers really clearly not very good. Australia had good and bad numbers, retail sales. That is just a relative strength winner. Unbelievable, that Aussie dollar. I mean, it's a relative strength monster. And I guess wheat, gold, they got everything. And if the Aussie's telling us something, then commodity prices could be going higher. If commodity prices do roll back down, I think that could be the end of the Aussie. We got big data next week coming. Big data out of all countries except the U.S. All countries except the U.S. London also, terrible numbers. The only number that was good was that PMI number, big deal. Everything else, house prices, all these numbers were just terrible. Mortgage approvals, London saying things are almost coming to the end. give me a freaking break. It's not over by a long shot. And there's going to be some sort of, in my opinion, comet coming out of the right field, whatever, boom. Because there's something coming again. We have the Persian Gulf situation. We have 2 U.S. carrier battle groups going to enter the Persian Gulf. I think May 7th they start to come in. Something's going to be happening there. Regard to the Dow Jones Industrial Average, 13.2. Again, we said this Dow's pushing higher. 13.2 is the 61.8% retracement. Friday's highs are going to be very important also. We take out Friday's highs and the S&P holds 1,400. The stock market looks like it's going higher. Bond yields are breaking out to the upside. That's good for the stock market. As bond prices go down, they put that money to work in equities. So I'm a bear on the stock market, but you got to be on the sideline right here. And the yen carry trade with Shirakawa doing what he did, and the dollar yen, as we see here, look at that dollar yen, absolutely breaking out to the upside. That 105 level, it looks, closing over 105, that's very bullish. Stock market bullish. So there's, I think we're going into a phase right now where, the beginning of the quarter, the stock market's rallying. I think that the U.S., everyone's anticipating the U.S. is doing okay. Now the world is slowing down. So, and remember, the euro's very overbought. I think this 150 level, do I think we're going to get to 150 this week? Probably not. Do I think we're going to grind down at some point and test 150? Absolutely. I just think, a lot of stuff out of the U.S., I think, things aren't as good as the media is painting it out to be. And I understand everyone's getting bullish, and I agree that the stock market, technically, things look like we're going higher. But boy, in the summer, I think, and towards the end of the year, as corporate profits are diluted because of these sovereign wealth funds buying into the United States and not just selling them, basically they're taking this stuff and they're converting it into hard assets. They're taking stuff out, they're converting oil into assets, and they're buying pieces of everything. And their day will come when they panic and they just need the hell out. But what happens when they need to bring that money back, when their economies collapse? That's what I'm nervous about, is that eventually Japan and China are going to need those treasuries back, that money back from the treasuries they own in the U.S., and the U.S. has to print more money, and that causes the dollar to melt down once again. So we want to look at that. We do have numbers coming out next week, and again, Dow taking out Friday's high, very important, very big. We do have gold over 860, under 850. We go to 800 if we break through 850, take out those lows, and above 860, that could be a nice long up to 900, easy. Oil, I think there's fear factor, risk factor, and that's why oil's going up, came back so much. But I think we might make a double top. Obviously, we go through 120, and, we go to, listen, we go through 120, we go to 130 if you measure the move. So next week is very important for oil. U.S. bond yields look like they're going higher. Big breakout on the 2-year, 10-year also pushing higher, 2.43 on the 2-year. That's looking bullish. And again, next week, big data. We got employment data out of New Zealand, rate decision out of Australia. Employment data also out of Australia as well. Canadian Ivy Index, that's a PMI, very important. Employment on Friday. And then we get rate decisions out of Europe and London. Big week for other currencies. Swiss CPI, very big data for other currencies. And I think if those data show weakness, we might see some more dollar strength, but I don't see a total melt up in the dollar. Dollar index 75, I think we're going to hit that, but we're going to grind there. Maybe we melt down a little bit and then we bounce later on in the week. I don't know. I just don't see the U.S. just dollar exploding another week. I think we have a little bit of a wick where we have a bounce. Whereas if you notice, we really closed not so great, not the lows, but we didn't close very well. And I think that the lows get taken out during the week. Even though we have little hammers on euro sterling, euro dollar, maybe a hammer. Dollar Swiss, no shooting star. We have a cable with no real direction. Cable just goes up and down 200 pips a day. It's ridiculous. No direction in cable. I think we get direction in cable. I think euro sterling could rally, but I think cable's probably going to break down next week, maybe. And I think again, the commodity currencies, if the commodity prices bounce, that's going to be bullish. And these things are the relative strength monster. This Australian dollar is just a freaking monster. When will it go down? Maybe next week. Have a good week, people. Make some money. Andrew Spanton, voice of Forex. The only voice you're going to need in Forex once a week. Part 2 is coming. Technical analysis and trading tips. See you in a bit.